Super Trades! I want to do a video analysis update on how to screen for stocks at the end of the day that had unusually statistically significant options volume that was biased to the bull side, right? How can we just wake up one day and take 8 hours worth or 8.5 hours worth of market activity? How can people like me, right? Because this isn't investment advice, but I think this is a fun topic for FinTwit, right? Screening for stocks. You guys are following, people on FinTwit to learn how to screen for stocks, see how they do it. A lot of people, they're professionals. We're all just on FinTwit, doing what we love. I personally make my entire living off of the stock market, and most of it, almost all of it, just to be completely honest, is not from speculative activity. Just to be completely honest, and I'll show you what I mean by that right now, just really quick. Today, or 2 days ago, I bought an equal weight position, adding to a position I already have. In this ETF, TSLP, that is up 21% today. This longs Tesla, pays a 25% dividend, and it runs the synthetic covered call strategy. That means it buys an at-the-money call, sells an at-the-money put, and then it sells an out-of-the-money call against that 100 delta exposure that it just created. Now, the other thing I have equal weight is this ETF, CRSH. Now, both of these ETFs pay pretty big dividends. We'll see what the dividend for this ETF is. Right now, it's yielding up in the 80s. So the average yield for these ETFs is about, in the mid 40s, the upper 40s, and this ETF is down 15%. That means that on a delta neutral position, the principal is up 6.5%. I didn't pick a direction, and also, I haven't even gotten dividends from that most recent position yesterday. Now, of course, that was adding to pre-existing positions. It was adding to a position that was actually bull biased, Tesla, because I've invested in Tesla in the past. I've gone over that. But just that individual position, that was a little bit of a tangent. But just showing how a delta neutral position like that can get dividends without predicting the future direction. So when I am predicting the future direction, there's even more ways to get even bigger dividends and total returns by doing that, especially with companies like YieldMax, ProShares, Defiance, and now the big boys are competing with them. BlackRock has 2 ETFs yielding 20 to 25%, tracking the S&P 500 and the Russell 2000. Bet you don't read much about that on FinTwit. Anyway, let's look at some stocks that had unusual options volume. This is going to be to the bull side. And I know the reason that I'm doing this is not to encourage people to buy options. That's absolutely not why I'm doing this at all. I actually think that buying options speculatively, the only reason that I do that, my favorite reason to do that, the best options I bought were on Ring Energy, which I haven't even made money on that yet because it's an oil stock. Imperial Petroleum, which I made a good amount of money on, and New Gold Corp. The reason that I picked those are not because they're my biggest winners. It's because they were all exposure to commodities. And I am exposed to commodities whether I like it or not. If things get more expensive, then the value of my dividends goes down. I'm exposed to commodities whether I like it or not. It's not my choice. So when I need to get exposure to commodities, options are a very useful way to do that. There's a lot of stocks in this world that I really can't justify. I need options exposure to because I'm so afraid that the value of Fireman BV's bioscience is going to go up, for example. Anyway, what I did is I went to options, unusual options volume, and this will give me the most unusual options volume. What I did was I sorted by the lowest put to call volume ratio, and now I'm going to refresh, and this is my favorite screen, is refreshing this and also doing this with the ETF screen. Then I get it and I sort by the highest 1 month volume change. We're going to see Mattel 1,174% going to be featured in this video. Fireman BV 512% unusual options volume, 0 puts, and 98% calls for Mattel, zero puts for Fireman BV. So we're seeing that unusual options volume and seeing that clear bull bias. Okay, so a lot of people, they think that all they're supposed to do, a lot of traders on Finchwood, they act like the job is to read Bloomberg and Fox Business and get in debates all day. That's what people should do for fun on Finchwood, to screw around, to blow off steam. Okay, anyway, the last stock that's going to be in this, look at Pacific Bioscience down there. That's interesting. Anyway, Under Armour. This is very interesting. 389% unusual options volume, 99% call bias. So those are the three stocks. So that's just to say they're statistically significant. It's not pulling names out of a hat, and it's definitely not just finding the popular stock of the day. In fact, if we think about these are stocks probably most people would have never had on their radar, never been thinking about. But the MMs, that's when they like to strike an A, B, C correction for Mattel, and a 1, 2, 3. Now look at this RSI up here, making the highest high on the weekly RSI at 67.40, shallow wave 4 and a wave 5 that ends with momentum divergence at 63.62 on the weekly. That's a very beautiful 5 waves up. Wave 3 makes the highest high, wave 5 ends with Momo, an A, B, C correction. Then from this low, a wave 1 and a wave 2, I'm looking for 15.36 to not get broken. And the length of wave 1 placed at the wave 2 low can suggest there's a long-term rally to begin up into the mid-30s for Mattel. So Mattel, if you're not familiar, very large toy manufacturing company. Mattel is, we're going to look at some of these fundamentals right now, and that won't be the end of the charting. 4.76% interest coverage, very good. Return on assets, 8.52%. I love to see that. 97% institutional shareholders, very good. Mattel is the world's largest manufacturer of toys. It's got that monopoly side to it. The company's products are sold. We know what Mattel is. Hopefully you know what Mattel is. Oh my gosh, Fisher Price, get a life. Mattel is looking like it's going to enter wave 3. So what did this unusual options volume, over 1,000%, 98% call bias, we see pretty aggressive, out of the money, 11,000 contracts for $35 a piece, out of the money, expiring in a couple days, in a couple of weeks, 11/15/2024. Very interesting, 3 or 4 weeks, extremely high delta with that 3-week, 4-week window. So that's a high gamma, high delta play. Every $2 or $3, that's a lot of money that they're going to make per contract if they're right. But that thing is going to get obliterated if Mattel goes down $1 or $2. What could be going on here, even if they're wrong? Let's say we get to the expiration and we haven't seen 19 be hit. We didn't even see a pop. We never saw Mattel go above 18.57. What could be happening is that this is a whale that really wants to accumulate Mattel, and they're saying, I can't afford to see Mattel go past 19. That's why I'm getting all these contracts, because if it does, the delta is essentially going to double. What's that mean? The delta is the percentage chance that an option is going to expire in the money. We see right here the delta is 39, but the gamma is extremely high. The gamma is 29. That means that for every dollar that Mattel goes up, this delta, which is the rate of change of this options, the gamma is the rate of change of an options delta. The delta is not only how the percentage chance that option is going to expire in the money. Right now it's a 39% chance because it's out of the money and it's in 3 weeks. The delta is also saying the sensitivity of the option to a $1 movement. If this Mattel goes up $1, the value of the options contract, all else being equal, is going to go up $39. Now remember, that's all else being equal because theta is going to get involved. That's why it's a very aggressive position, because we're also going to see much higher theta because of this. But what can happen here is that if Mattel does get running off, this guy bought a 39 delta contract for $35, and it's going to expire as a 100 Delta contract. That means he can go from exercising and buying 39 shares for $35, and he can exercise those contracts and he can buy 100 shares. He can't exercise it when they're out of the money, but he can buy the right to exercise 100. And so that could be what he's doing. He could also just be trying to make a lot of money on these kind of short-term contracts. We'll see what happens to this 11-15-19 call for Mattel. Let's look at Fireman BV. I always love looking at these biotechs because it's just so interesting what's going on here. When's earnings? What in the world is this stock even doing? It's just very interesting to pretend that these people are doctors. Look at the fundamentals of these stocks. An interest coverage ratio of negative 1,153. This company's fundamentals are very bad. We're going to look at sales of 70,000 sales. That was hard to even fathom because that can't even be rent for a building for that to be the sales. InflaRx NV is a clinical stage biopharmaceutical company. It focuses on applying its proprietary anti-C5A technology to discover and develop first-in-class potent and specific inhibitors of C5A. InflaRx NV. It's based in Germany. I mean, this is a German pharmaceutical preparations company. Let's see what the website says. It controls inflammation, targeting acute, life-threatening, and chronic inflammatory disease. This is a very interesting selection. Clinical development. What could be going on? Could it be an election play? It's just so interesting to see how these play out because I really can't even pretend to to speculate on this one. I'm not familiar with this company's schedule. I highly doubt that the people who bought these options, what options did they buy? Might be a small dollar amount. We'll see. It doesn't even have options that are near its current strike price. Yeah, I bought the 2.5 strike extremely far out of the money, 3,500 contracts for $19 a piece. Let's see how those play out. That might be a gambler. It might be someone who... Anyway. Fireman BV, IFRX, looking at the Elliott wave, bar chart is going to... Oh no, did I really just... I don't even know if I can exit all that. I don't even know if I know how to. Weekly, is it even weekly? Weekly and then 3 year. Okay, boom. So we're gonna look at this. Remember, I have to kind of relearn. The one good thing so far is I think that these trend extensions are gonna be a little easier. So that's a good thing. That's a good thing. Okay, that's pretty cool. That's pretty cool. It got me right to 5.20, so that saves a lot of time. Now, the only problem is I can't do ABC, not looking too bad. So always remember, efficacy is the belief that you are in control of your future, not anyone else, not your parents, not your spouse, not your employer, not the president. You are in control of your happiness. You're in control of the outcome and the quality of your life. This isn't some mystical woo-woo. This is an actual statistical fact that says that is the highest correlate to happiness. Even bigger than financial success and even bigger than marital happiness. What's more important than both of those things, which are like number 2 and number 3, what's more important than both of those things is efficacy by far in determining how happy you are from a statistical correlation coefficient standpoint. Efficacy is the belief that you are in control of your happiness. So anyway, I didn't give up on bar chart. I see now that this is kind of cool that they're gonna have this. Now I just need to figure out how to add ABC. But I like that I got these fibs right away, perfect for Fireman BV Wave 1, A, B, C Wave 2, another Wave 1, and another Wave 2. The invalidation is 1.1650. I'm looking for a Wave 3 of Wave 3 to begin. What I did for these time fibs is I began right here with June 2022, and then I connected it with this Wave 1 high, and that got me to April of 2023. This is the 3 week time fib for that measurement, and it looks like we're about to see a Wave 3 begin. So that's very interesting. I'm expecting a bull period to begin until for a significant amount of time, possibly for multiple years. But just judging on how this Wave 1 went, Wave 3 can be fast above 1.165. Let's look at Under Armour. We all know what Under Armour is. So interesting though, because we all know what Under Armour is, but who's talking about Under Armour? Who's looking at Under Armour besides the people familiar with the screen and these institutions? This is not going on Barron's and reading gossip. And so many people, they really get tricked into, okay, I'm gonna go research finance. I'm gonna go research learning. I'm not saying that this what you're doing right now is not researching finance. What you're doing right now is being entertained. All right, let's make that, once again, abundantly clear. You're being entertained right now. You're not researching finance. Okay? This is me showing you that this is how I spend my afternoons. Okay, I'm not on Barron's. I'm not on Fox Business. I'm not, when you see me talking about Donald Trump and Kamala Harris and all that, yeah, I think that stuff is very important. The specific topics I'm talking about, but that's not finance. Maybe it is. In a way, it is, right? If I if I lose all my rights and liberties, but the gun stocks go up and the vaccine stocks go up and the the Fox News common stock goes up, then right, maybe I'll make money, but I won't be free, right? So that might be a financial connection. But this is what I spend my time doing. I don't see a lot of this on FinTwitch, to be honest. When it is done, it's people trying to sell, cheddar flow or various types of options flow stuff, and I don't think that they're really statistically quantifying why this is unusual. 18,743 contracts bought on Under Armour. If all of those were exercised, this person could buy 18,743 shares. This looks like an accumulator, and they're out of the money. Nice delta and gamma. They can make a lot of money on these, and they can also buy a lot of shares of Under Armour. This is a whale, and no one is looking at Under Armour. This is how it is statistically unusually quantified that today was a big day. But did we see with price that today was a big day? No, we don't see anything about Under Armour except for going under the hood that this was a big day for the stock. It looks like a whale was very excited, but what's going to happen? I mean, really, we can see, and you guys will say this is coincidence or whatever. Not you guys, but the people, regular people are going to say that this is a coincidence when we do get this news in the future that Under Armour's got this big catalyst, right? Then it's going to be, oh, well, that was the catalyst. No, the catalyst was today. The catalyst was the quiet 0.23% day. The catalyst isn't the 5%, 6% gap. I hope that Under Armour didn't have earnings today. Otherwise, I would look a little dumb. But the catalyst isn't. The catalyst isn't when we get the news, in my opinion. or even if that is the catalyst, that's too late. That's when the option premium, the implied volatility is going to be spiked up. The delta, and the theta are going to be working against each other too much. And this guy's options are going to be deep in the money. This whale is already going to have his position. He's going to probably sell half of it or exercise half of the options. Sell a quarter of the shares. Anyway, we look at Under Armour right now. A, B, C correction. Could this be a long-term? Could this be a long-term wave 2 correction ending for Under Armour? I'm going to take a picture of probably the ugliest thumbnail ever and say above this low of 6.17. That's what this whale is ultimately gaming.